Yo, what's up, guys? Today, another trade recap on the same day, two trade recaps on the same day. But yeah, today is the price action of today, so 10th of June. And yeah, we'll see what trade I took. I took a trade on Nasdaq. I made $549. So yeah, not a bad trade. I'll show you guys in a second. So yeah, let's go to my daily bias for the day, what it was. So the S&P 500 is a little bit simpler to explain because it's much cleaner than the Nasdaq. I'll show you the Nasdaq in a minute. So yeah, we have market confluence. So we have these 4-hour lows, we have these 4-hour highs, we have these 4-hour lows here as well, but they have been taken out. So we do not mark them out. 1 second. We also have a bullish S&T which we formed with Nasdaq, and I'll show you on Nasdaq now so that you understand better. It's a little bit of a mess, I'm sorry, but I'll try to show you the best I can because I don't want to delete this, otherwise you won't see the trade. So we have these 4-hour highs, we have these 4-hour lows, and we have these 4-hour lows, if you can see, move down and move up. And what happened is very simple. It's a bullish SMT divergence. SMT is a concept which some of you guys are asking me to explain, and I'll try to explain it to you again. It's the fourth time I'm explaining it, or fifth time. I'm explaining this every single video, man. I swear. You guys need to learn at some point, guys. I'm joking. So basically, an SMT is basically, I can draw here if you guys want to see. So basically, SMT is basically when the Nasdaq or the S&P 500, one of the pairs takes out a high and the other pair doesn't take it out. So it tells us is one index is ahead of time than the other. So one index is telling us, okay, price wants to move lower, while this index is the lagging index because it is not going lower yet, while this one is. The theory behind this is more about trends and everything. I can leave this here. No, it's more about trends because, trends move up, move down, move up and move down. The moment you break a low, you are on a downtrend. This is an uptrend because the lows are protected. Once you break the low, you are in a downtrend, and the trend changes. And once you break a high, the trend moves up, whatever. This is really the basics of trading. And what we form here is a higher low, like a trend, and I explain it to you. A trend is formed by higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The moment we form a higher low instead of a higher high, we should be forming like a higher high, but we are forming a higher low. It's also a confluence that we are changing market structure. We are changing the trend structure of the market. And that's really what an SMT is, While this is forming a higher high, which is the continuation of the uptrend, this is forming a higher low. So what this index is telling us? Oh, the price wants to go lower. And what this index is telling us is that, hey, price wants to go lower because this shows one of the index is telling you the price wants to go lower, and the other index is late. So what do you have the opportunity to do to enter on this index? It's the lagging index. It's the index that is behind in time compared to the other one, and here is an SMT. In this case, a bearish SMT. What we have here is a bullish SMT. I'll show you what you guys that. So what happened is, you can see here that the Nasdaq took out these lows on the Nasdaq, and we have this SMT, but I'll show it to you. While the S&P took out those lows, and the Nasdaq, I'm really sorry, guys. Today it's a little bit of a mess. And Nasdaq did not take out these lows, so this is a low that we are monitoring, and this was not taken. I'm sorry, it's a little bit of a mess right here, but yeah, I'll explain you everything. So what happened next? Price move higher, and this is really what the bias was for the day, because we have these 4-hour lows, this 4-hour SMT, which is, again, higher time frame holds higher power. So this 4-hour SMT should be pretty strong, and we should be going higher and higher and higher and higher. And this is exactly what is happening right now. We are in a bullish trend. Look at this, so beautiful, Again, if you go to 1 hour, boom, moving up, 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 and up. But what I wanted to see is, yes, the bias is bullish for the day, but price isn't going to move up, 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 and up. We are going to see at least a reaction. Of course, here it looks like it's going up and up and up and up. But when market opened, in this line right here, we were approaching this 1 hour fair value gap, which for you guys that don't know how I trade, I basically trade liquidity and imbalances, and the reaction out of that, and the continuation out of that, and again the confirmation out of that. It's a really simple strategy. If you want to teach, guys, I'll leave the link in the description for a 5-hour video, which you guys can learn exactly how I trade. Every single confluence, everything I take is going to be in the description down below. So what is this? This is a 1 hour fair value gap, and this is imbalance of price. So price as the potential of reversing right here. It doesn't have to reverse, but it has the potential to possibly reverse. So yeah, why did I want to take the trade? I wanted to take the trade on Nasdaq. Why? Because we are going more towards the liquidity concept of it. So on Nasdaq, we have these equal lows. So we have these hourly lows and these hourly lows, and also these 4-hour lows and these 4-hour lows, which are pretty close together. And when you have lows stacked like that, it's a let me see where my pencil is. Where the hell is my pencil, bro? Right here. And this is like very low resistance liquidity for the market just to go, because if market comes here and sweeps one, it will want just sweep one to sweep all three, because they are super close together. So it's a super strong draw on liquidity. I knew price wanted to come down there and took out some liquidity. So that was really my bias for this. And I took it on Nasdaq because on S&P we formed SMT, so we didn't have those equal lows. We have these lows all the way down here, yeah, but we don't have those relative equal lows that we have right here super close together. Because again, they have already been taken out. I can draw it for them for you. They have been taken out, so they don't matter anymore. Let's go. Market opens. Let's go to 5 minutes now. Market opens. We're in this fair value gap. What am I thinking? Okay, what I'm waiting for a liquidity sweep followed by a break of structure, inverse fair value gap, followed by a continuation confluence, either a fair value gap getting filled, or block, break a block getting filled, or equilibrium getting filled. Then we go to the 1 minute. This is really strategy based, but I'm just teaching you the concepts, not really the time frame. So then I'm waiting for a break of structure or inverse fair value gap, and then I enter on that, or a 79% Fibonacci extension if you want to go very deep with it. But really, that's not really important for now. Market opens, we see a price move up, and this was really a mess, and I'll show you how I took the trade. So basically, I knew price wanted to go lower. If not take these hourly lows, it will probably fill out some of the liquidity. So I knew where price I wanted to go. I was going to enter on a trade with very low risk. So when I'm going to be more risky on market, more risky on the trades I take, I'll lower the risk so that my trades are risky, and sometimes I'll lose them, yes, but they aren't safer trades, but they will be risky trades. So that's why I lower the risk on it, because I have the potential of making money in a day that price doesn't give us the action. Yeah, macro opens. What do we see? Very simple stuff, really. This is just the concept. I know it's a mess right now, but I'll try to clear it up for you. So what do you see once market opens? So we have these highs right here. We have liquidity sweep followed by inverse value gap right here. This isn't even an inverse value gap, but it's a break of structure right here. We get break of structure right here. It's not a inverse value gap because the candles are overposed. So they are one above the other. So it's not a inverse value gap. We get break of structure right here. Then what we're waiting for after break of structure? We're waiting for a retracement into areas of interest. So again, I could teach you everything, but the video will be like 1 hour, 2 hours long. So let's go straight into it. And if you want to learn more, go link in the description. There's a 5-hour video for you guys to watch. And yeah, you guys can learn from there. But yeah. Break structure to the downside, waiting for a retracement, either 5-hour gap, either lower block, break a block, equilibrium. What do we mark? Equilibrium, from these highs up to these lows, then we get a retracement into this equilibrium, we get a retracement into this 5-hour gap right here, you can see this 5-hour gap, and I believe, and also into this other block. So our block is the move up prior to the break of structure, here, right here. And this is very concept, maybe, very... I'm sorry guys, I'm just messing around. This is very complex maybe for you that you are learning this, hearing this for the first time. But I promise you, once you watch the video and you understand the confluences, this gets much simpler. This is a lot of concepts for sure, and it's very tough to understand, but hey, it is what it is. So we get the reaction of that. We enter on the reaction out of that, really. So we enter right here. And bro, I was ready to forward, man, because this was really testing my emotions on this day, because we go a little bit down and prices moves up again, and then we're edging our stop loss, editing our stop loss. I'm marking confluences, and I'm marking this inverse gap right here, trying to see the inverse gap. We get inverse gap, but then price moves higher again, and I'm like, damn, bro, what is price doing? And price just keeps moving sideways for a long time, also going up here, bro. And my stop loss on this trade was it was low risk though, so it was 250 that I risk on this trade. I made 549. So if you want to get technical with it, and price went all the way up here, and I was like 190 or two something, 200 and something negative, and I'm like, damn, like, yeah. And that's why, you know, sometimes it's important for you when you are trading not to show the value on it. So show the points of the market instead of showing the value, because it can really mess you up. And you know, and I'm used to trading without any value, so trades, you know, and I really see the points. So price going up, price moving down, taking partials where I should, and everything. And now because I'm trading on a funnel account, you know, I'm seeing the values of it, and it's really messing me up. And I was like, okay, I need to change this. How to change it on Google? Go to the settings, I changed it, and just much better. So once price was here and everything, I was chilled because I knew what my bias was. I wasn't letting that money value get into my mind, because that's really what's messing you up. You guys are emotionally attached to money, and that's really screwing your thought process, and that's really what's screwing you over, guys. Yeah, you know, we get this leg down, then we get a retracement into equilibrium, and yeah, I was really chill at this point. You know, I was more studying than really watching the markets. But then I start getting notifications, and yeah, guess what? We respect this 1 minute order block and breaker block. I can mark it down for you guys if you want to see. This 1 minute order block, this 1 minute breaker block, right here. And then prices moves lower and lower, get breakout structure, price moves lower, takes out take profit one, which was 5 minute lows. I can show you guys. Now this is very quick to show because this computer is very quick. 5 minute lows. I could put take profit two on these lows, but I was like, man, because we have these lows right here, these 5 minute lows, which are very close to each other, again, relative equal lows, I'll put my take profit 2 instead of here. I'll put here closer to this one, and if it takes this one and not this one, it will be stupid for the market to do that. But it can do that, you know. But price normally wants to take both of them, and not only we take both of them, we also take these lows right here. Boom. You know, we do not take the hourly lows, but we take also these lows right here. So what happened was, you know, I entered with 6 contracts on each trade. Take profit 1, 2 contracts are out. Take profit 2, 2 contracts are out. And then price was moving. Once price hits these lows right here, I can show you on 1 minute. You know, these lows right here, I closed the position, the remaining 2 contracts. So yeah, and I got like closed right here because price was moving lower, so I got closed right here, which was a very good trade. You know, like for me, my mentality after seeing these, and I'll be completely honest with you, because I wasn't enjoying price action at all. I entered on a good setup, but then price was moving sideways. I was like, bro, I'm not really wanting to trade. So once price hits take profit 1, what happened to my take profit 2? I don't know. I can mark it down. I think it was right here if I'm not sure. Let me check. It was right here on these lows. Boom. Let me put it green so that you guys can see my take profit. Boom. It's much better now. So, you know, because we were moving sideways for so long, I was like, bro, if price hits my TP2 or TP1, not TP1 because TP1 is very short risk reward ratio, but if price hits my TP2, I'll close all my position because I'm tired of this price action. And you know, even though the entry is good, I'm like, bro, with today's price action, I just want to close my trade, to be honest, you know. And you know, I wasn't really enjoying price action. Like, it was horrible, to be honest. It was a good trade, but from a horrible price action, you know, I just didn't enjoy it at all. And yeah, closed all my position here, and guess what? The rest will have been, you know, price hit TP1, price hit TP2. I put my stop loss to break even at TP1, then price continued to move lower, and then I closed all my position down here, which was a very good trade. You know, not the best trade, you know, it was a good trade, but again, price action wasn't really great. Look at this, it's just a mess. Maybe in the 5 minutes, we would have gotten a good trade. I'll check. No, I don't think so. There's nothing right here. There's a breakout structure. I know it's a mess, but I'm just analyzing the market. So to see if we could get a 5 minute entry. Possibly yes. Maybe I can do that again for you guys to see. I can maybe delete all these. Boom. Yeah, now it's much cleaner. So let's look for 5 minute entry. So we have this 5 minute order block. The price move up, which is this move, the order block. So again, quite a bit messy, but you know, you could track a trade out of 5 minutes. So I got a 5 minute breakout structure right here, which is one of the confidence that we need, followed by a retracement into this area right here, you know, into equilibrium. Then we don't get fair value gap. We could get order block, but the thing is, our order block is this leg up right here, and it is not it. actually hit the order block, so it's actually a good one. I wasn't expecting it because this order block is super ugly and the breaker block is moved prior to that. Yeah, price hits order block, breaker block, equilibrium. We go to the 1 minute. Then we go to the 1 minute after seeing the fair value gap, the order block, the breaker block, and the equilibrium getting filled, and we wait. What we wait for? Inverse fair value gap or break of structure. What could we get into here? So yeah, go to 1 minute, enter on probably inverse fair value gap right here. This inverse, sorry guys, nope, let me mark correctly. You can enter on this tiny ass inverse fair value gap. Fuck, bro. This is so tiny. That's what she said. We enter on this. Stop loss right here. You can put stop loss above these eyes. And then take profit all the way. Take profit 1 all the way up here. And bro, take profit 1 is giving 1.45 risk to reward ratio. If you put $100 in this trade, you are getting 1.45. Take profit 2, bro, 2.5. Literally insane risk to reward ratio. And then take profit 3 all the way down here. Or on these orders, but they didn't get taken out. But realistically, if it was like how I took my trade, it was right here. It was even lower, but you know, I get it. You get it. 4.42 risk to reward ratio. Did I took this trade? No, I took in 1 minute alone. So it was a little bit more risky, and I was waiting for that, and with less risk as well, you know. And with a bigger stop loss as well because my trade was a little bit lower. And yeah, you know, I was still learning the platform as well. You know, I was messing around how to take partials. I closed trades. I closed 2 trades, 2 small trades, to learn how to take partials, you know, and everything. And once I got once I got to figure it out, you know, my trade was like open super low. My stop loss was a little bit bigger than what I wish it was in terms of size or in terms of risk. In terms of risk, it was okay, but in terms of size, and it didn't give me the ideal risk to reward ratio that I would have hoped. But hey, you know, very good trade, 4.42 risk to reward ratio in a messy price action. So hey, you know, this wasn't the trade I took. This will be the ideal trade to take, and I'll of course journal about it because you know, even in 5 minutes, it would have been possible to take a good trade even with this shitty ass price action. So yeah, guys, if you like the video, make sure to subscribe. You know, this is more shorter video today, 2 videos today. So I have to trade my first trade in my final account evaluation. So yeah, hopefully I pass it to the final account. And yeah, that's basically it. You know, if you guys enjoy, comment it down below, leave a like and share to your friends if you guys want. So yeah, if you guys have any doubts as well with any of the concepts that I teach right here, I don't teach anything, bro. I just show my trades. So if you guys want to have any doubts, go to the link in the description. There's a tutorial or a guide or a 5-hour video about how you can trade like this as well. Yeah, it's a very long video, but you know, if you are dedicated about this, you'll spend much more than 5 hours in this per day for sure, man. So yeah, guys, I hope you guys enjoyed it, and see you guys on the next video, guys. Bye bye.